For the year ended June 30th, 2022. And that's now the question number 1. The variance between amount in the statement of receipts and disbursements and supporting schedules. Is that the one? Okay. Yeah. So I'll read number 1 and number 2 as well. For number 1, sorry, Chair. On Chair, we agree with the auditor's observation that there was an unreconciled figure of 2,216,500 being sales fees and 5,816,382 being physical planning and development revenues. We regret that the schedules supporting the revenue collection were not availed for verification. However, the same have now been availed for verification. The sales fees is Appendix 1.1, the physical planning and development revenue, Appendix 1.2. And if I could read then...
Actually, the main question was on number 2.
Okay, sorry, then let me do number 2. On Chair, we agree with the auditor's observation. The revenue reported in the County Revenue Fund statement of 3,259,072,974.37 is a total of own source revenue of 1,707,447,685 and FIF of 1,551,625,289.03, Appendix 2.1. FIF is collected and banked in commercial banks and spent by health facilities, and therefore it is not dispersed to the CRF account. The amount of 3,257,108,245 reported was therefore erroneous. The statement should have shown an amount of 1,707,447,685 being on-source revenue that is collected through revenue collection banks and dispersed to the CRF. The reported disbursements of 1,596,848,330 related to disbursements as per the CBK statement availed. The variance of 183,474,415 is as a result of cash in transit and house rent collected through the payroll and deposited directly to the CRF account without passing through the county revenue collection accounts. That's Appendix 2.2. Thank you, Chair.
Auditor General, does that first explanation make sense?
Chair, it doesn't, because even the rent deducted from house should go to the ROR account, because under ROR we have an account for rent collected from houses. So it's supposed to go to the ROR so that it comes to CRF, then to the... it's not good to take it direct to the CRF.
So the argument on FIF, because my expectation is that everything that is received by the county must be reflected in the receiver of revenue report. Is there an exclusion? Governor, your interpretation is not consistent with our understanding. That everything that you have collected should be reflected in the ROR, and then they can be disbursed to the respective institutions that utilize them, or disbursed to the respective funds. And I'm assuming that there's a law. You've got a facility improvement fund law in the county. So, Auditor General, when you met with the county, because I would have expected these accounting issues for you guys to agree. Even sitting here as a pedestrian, I know that all local revenue must be reflected in the ROR statement.
Chair, during our meetings it came up, and they also accepted that it is an error even depositing this money in the CRF. It's supposed to go to the ROR.
So why didn't they advise the governor accordingly? Because what the governor is reading here is not consistent with the law. Governor.
Chair, actually that's been a running issue on the FIF, because what has generally happened is that it has been treated differently. So I would argue, because I think, Chair, you said what's my interpretation, I would argue it's not spent at source per se, because it's banked and then it's budgeted by the hospital boards and they use it. However, I'm also in agreement going forward that we need to combine the two instead of having them as two separate, treating them separately or differently.
Yeah,
but for all the years it's been treated.
Your response is misleading because we cannot, if you were to take written responses, we will strongly disagree with your interpretation. Okay. All revenues collected in the county must be reflected in the receipt of revenue statement.
Oh, okay.
Actually, not just receipt of revenue, on CR, the county revenue fund. The county revenue fund must reflect everything that you have received from equitable share, conditional grants, and on-source revenue. And whatever it is you reflected in CRF must be consistent with what is reflected in the ROR, and should also be consistent with what is reflected in the county executive statement. Again, Auditor General, there's a 2 million shilling difference between what is in the ROR and what is in the CRF, even if you put that interpretation aside. Have you seen that? 3.257 versus 3.259 billion. Ideally, the two should tie. Was it an audit query? Or you just questioned the entire universe? So there's a problem with these two statements. And Auditor General, you need to advise us on what recommendation to make on these two statements. We have already talked about punitive professional sanctions. The governor has talked of administrative action. But what should they do for the people of Nakuru to get a proper picture now that they didn't do it in 2022, 2023?
Chair, I think the only option they have out is to have competent staff who will go back, start reconciling these figures so that we have the correct figures to adopt in 2024 financial statements, so that we can have a prior year adjustment to adopt the new balances. Otherwise, as they are, they will still be carrying on the same variances.
So we must give directions that in the current audit or in the preparation of financial statements for 23-24, that those adjustments need to be made. Because otherwise we take the view that those two financial statements are not reflective of the state of affairs. Patrick.
Thank you, Chair. I just wanted to mention that this is the beauty of cash accounting, because transactions are recorded when cash moves. So unless even those adjustments that the county wants to make are properly supported and properly documented, they are authorized and approved by the relevant officers, and there is evidence of how cash is moving, then those adjustments that the county also wants to make will have to be looked at properly for them to be accepted. Thank you, Chair. That's the light I wanted to shed on that issue.
Okay, so we can trust you, we can trust your office to scrutinize and give us a report on whether the necessary action has been taken.
We'll do that, Chair.
There's a bigger conversation, Governor, that we must have between the Senate and the Council of Governors. These financial statements were being prepared in September 2022, 15th and 28th of September. Did you have an executive committee by that date?
Actually, Chair, I personally did not, because I was taken to court and I didn't have my executive committee until I think January or February.
So,
January, actually.
So even if it was, someone didn't go to court, this we must have a conversation on financial reporting during an election year, because we already know that elections will be held in August. We already know that the financial year closes on 30th of June. What should we do? Should we say that the outgoing administration must close the audit issues, or do we say that the incoming administration should be the one to report? Because August falls right in the middle of the reporting and audit period. Should we put it in law that when there is an election, then counties must prepare their reports at least 1 month, no, at most 1 month after the end of the financial year, so that by the end of July, the audit is complete? Because if it runs through the campaigns, and then there's a new government, the chief officers are not sure that they're going to keep their jobs. They'll disappear. Everyone in the old administration is not serious, and perhaps sometimes they even steal, because knowing that their time is up. So there must be some thought process around this. OAG, what are your thoughts?
Thank you, Chair. I think from our side, there is a request, or there is a pending request to amend the PFM Act. And submissions were made by OAG to lessen the reporting period by institutions, so that we get much more time for us to be able to report, to audit and report, even before, so that now, even if it doesn't affect the year of elections only, but even these other years, we have adequate time for us now to be able to audit and report. So there's a request to amend the Public Finance Management Act for the institutions to be given lesser period for them to report. Submit financial statement to OAG.
Yeah, because it's in Mombasa, where elections were pushed forward by a couple of weeks. And then the financial statements, the audit was going on during that period of suspension. You do recall that?
Chair, remember.
It was in Homa Bay, where KRA was entering into a deal with an advocate on the day before the governor was sworn in, and a deal that was binding on the county. So this transition thing, we need to think through it, because that's why we have adverse opinions, and it's likely that these are not errors. It's likely that this is actual theft of public resources. In fact, we'll be very hesitant to call these accounting errors. Some of this could be deliberate. So that conversation, we must have it. We were in Senate when we came up with the assumption of Office Act. Perhaps we need to go back to that act and tighten that element, because otherwise you're going to end up with pending bills which are not legitimate. They've just been created so that people can fleece the public. We'll see a lot of that as we go through this report, because 90% of the issues here remain outstanding because they are unsupported. So unless members have any conversation, I think we will, on this ROR and CRF, we shall take the direction that has been proposed by the Auditor General, that the adjustments must be done in this financial year. OAG.
Maybe, Chair, I would like us to discuss the last paragraph on lawfulness. There is areas of revenue over 7 billion. Maybe.
That is on ROR?
ROR. Areas of revenue. Under the report on lawfulness and effective use of public resources.
Okay. Governor, yes, we can talk about areas of revenue, and you will also describe to us the systems and the environment that you use to collect your own source revenue. I think those two there could be a relationship. Yeah, I'm being reminded by Senator Dulo that matter of transition, reporting in a transition period, must be captured in whatever amendments that we are proposing. But Clerk, I think it's an issue that even us, we might need to bring to the attention of the House, so that we think through it and find a statutory solution, or maybe a solution through regulation in the committee chaired by Senator Mofai. So let's go to areas of revenue quickly.
Chair, and just to take you, I
Senator
hope
Taraki.
your ROR and head of reporting are taking these matters we are raising seriously, because next time will be very unforgiving. I hope through the governor they are taking it seriously, because next time will be very, very unforgiving, because we don't want to see this. And I think governor, just at a point of concern is that at least ensure in entry, exit and management meetings they are part of the entire process, so that we don't come and discuss procedural issues. We need to be looking at the meat and take the concerns of OAG through the chair, so that we don't need to go back. And my advice to ROR and the new head of reporting through the chair is, you can see your colleague in ISPAC, we report them nowadays to ISPAC, and you might end up being struck out of the professional body, and may undermine even your integrity as a profession. And Governor, you are an advocate like some of us, you know the implications of being removed from the role of the advocates, for example. It goes into your integrity and professionalism. So I hope what we are raising here, I hope they are writing it down, not necessarily listening to it, but also noting it down. Thank you through the chair. Thank you.
Thank you, Senator. You may make a response on those comments as you address the issue of areas of revenue. You see, at this point, what we want is an assurance on the measures we are taking to collect